The market is not your friend, and it's not your enemy. It exists independently, moving forward every second, regardless of what you believe, hope, or desperately want. Every new trader enters the market believing they can control it, predict it, or outsmart it, without realizing they are stepping into something far bigger than themselves. At first, trading feels easy. A few green candles appear, confidence rises, and the trader begins to believe this game is simpler than everyone warned. But quietly, the market watches. It records every emotional decision, every rushed entry, and every moment when discipline disappears under excitement or fear. Traders come into the market carrying emotions: hope for freedom, fear of loss, greed for more, an ego that whispers they are smarter than others. The market carries no emotions at all. It moves based on liquidity, order flow, and probability, following rules that do not bend for individual traders. Every single candle on the chart represents decisions made by millions of people, institutions, and systems, all competing for profit at the same moment. Most traders do not listen to the market's message. Instead, they hear only what confirms their bias and ignore every warning sign right in front of them. When price starts moving upward, greed quietly appears. Traders increase position size, ignore risk, and convince themselves this time will be different. When price suddenly drops, fear takes over instantly. Logic disappears, hands shake, and decisions are made to escape pain instead of following a plan. The market does not react to your fear or excitement. It continues moving forward, doing exactly what it was always going to do. The market does not know where you entered your trade. That price level means nothing to it, even though it feels extremely important to you. It does not respect your stop loss either. If price needs liquidity there, it will take it without hesitation or apology. And the market certainly does not care about your dreams of wealth, freedom, or proving others wrong. Those dreams exist only in your mind. Retail traders are reactive. They chase price after it moves, entering late and exiting early, constantly one step behind what is actually happening. The market, however, anticipates. It moves before news, before emotions, and before most traders even realize something has changed. Traders chase breakouts with excitement, believing speed equals skill, unaware that many of these moves are designed to trap impatience. The market creates false moves to collect liquidity. It moves price just enough to trigger entries, then reverses without warning. This is where most trading accounts are destroyed, not slowly, but suddenly, after a series of emotional decisions made under pressure. It's not because traders are unintelligent. Many understand concepts, strategies, and patterns, but knowledge alone does not protect against emotion. Patience is rare in trading. Waiting feels painful, boring, and unproductive, even though patience is often the difference between profit and loss. The market rewards discipline quietly. It doesn't announce opportunities loudly, but it offers clean setups to those willing to wait. Impatience is punished immediately. Early entries, oversized positions, and emotional trades are corrected by the market without mercy. Eventually, smart traders stop fighting the market. They accept they cannot control it and shift focus towards controlling themselves. They stop predicting exact tops and bottoms, understanding that prediction feeds ego, not consistency. Instead, they react to confirmation, follow structure, and manage risk, letting probability work over many trades, not just one. The market is not evil or unfair. It does not target individuals. It simply moves based on supply, demand, and human behavior. Price is honest. It reflects truth in real time, exposing bad habits, weak discipline, and emotional decision-making without saying a word. The market acts like a mirror. It shows traders who they truly are when money and pressure remove all excuses. It reveals your discipline when rules are tested, not when trades are easy. It exposes your patience when nothing is happening and the urge to trade becomes strongest. And it highlights emotional control when losses occur, showing whether you learn or react. Most traders blame the market for their losses, calling it manipulated or unfair, instead of reviewing their own decisions honestly. Winning traders look inward. They journal, review mistakes, and improve execution instead of searching for someone else to blame. The market itself never changes. Fear and greed have existed for decades, repeating the same patterns again and again. People change. Some repeat mistakes forever, while others adapt, evolve, and eventually learn how to survive. So who actually wins in the end? Not the smartest, fastest, or loudest trader. The winner is the trader who listens to price, respects risk, and understands trading is a long-term process. Not the trader chasing signals, social media tips, or emotional excitement. The market always wins against emotion. Only disciplined traders survive long enough to win alongside it.